Hi everyone, it's Marissa and Twee here from Rise High. Thank you for joining us today. Today we are talking about mortgage prisoners. This term has been thrown around quite a lot, and with interest rates on the rise and property prices in the eastern states stabilising and dropping in some instances, more and more Australians are becoming mortgage prisoners, and we are super passionate about making sure that no one in our community becomes a mortgage prisoner. So today we're talking all things mortgage prisoner and what it means and how to make sure that you're not put in this position. Thanks for joining us, Twee.
Thank you for having me, Marissa.
So let's just start, Twee, by talking about what is a mortgage prisoner. How would you define a mortgage prisoner?
A mortgage prisoner, I would say, would be a mortgage holder who are stuck with their current lender because of a few factors. It could be that the property value has dropped, and if they were to change banks, it would cost them more in fees than savings. It could be that the interest rate has increased so much, over 11 times over the last 12 months, that the loan that they could afford 6 months ago, based on the new assessment rates that the bank have, they can't prove that they can service the same loan on paper. It could also mean changing their circumstances, change of jobs, family situation.
Yeah, so it's basically any situation where someone is actually stuck with their existing lender and there's and that they can't actually move. You actually pointed out a really interesting one, because obviously everyone knows that the interest rates have gone up a lot over the last 12 months. But, you know, they might be quite comfortably managing their loan repayments, even at the increased rates, and they're wanting to refinance to take advantage of some better rates at another bank or, you know, save a bit of money, but the bank says no.
Yep.
Can you just explain why that happens, where someone feels like they can comfortably meet the repayments and still
no.
save, but the bank's saying, well, you can't afford it anymore? So can you explain how that can happen?
Sure. So when you're looking to approach a new bank to take over an existing liability, a mortgage, that you need to prove to that bank that you can pay that mortgage. And banks have stress tests or mechanism for you to prove that you can still afford that loan. And the major one that they use is called an assessment rate, which is really average about 3% that they add on top of the qualifying rate that you would be getting. So back in COVID days, the rate was around 3%. They add the 3% on top of that, which is the assessment rate, and you need to service or prove that you can afford that loan, paying at 6% interest. Now, the interest rate average about 5%, add that assessment rate of 3% on top of that, you need to prove that you can pay that loan at 8%. And that's the difference between affordable, actually getting the loan approved or not.
So this is really, you know, this is really why we're seeing such a rise in mortgage prisoners, because a lot of people that could afford the mortgage at the low, when the interest rates were really, really low, you know, on paper, now they might struggle to be able to refinance, even if it is just a dollar for dollar refinance.
Correct.
And hence be trapped with their existing lender.
Yeah.
I mean, what are the consequences of really becoming a mortgage prisoner and being trapped with your existing lender, Twee?
Yeah, so nobody likes to be trapped in anything.
No.
People love to have choice.
Yes.
And I guess the major one and most relevant nowadays is knowing that you're on a high interest rate and you're paying that high interest rate, but knowing that there's a better rate just down the road, but you can't access that. And also with living expenses, a small saving in your interest rate from your mortgage will mean a lot in terms of living expenses and covering the costs of everyday expenses. So
absolutely,
that would be really hard for some families to understand that they can get a better rate, but technically under the new assessment rate they can't get the loan.
I think, you know, that's such a good point, because obviously all cost of living is going up at the moment, not only mortgage repayments, and every dollar of savings is really important. It's probably important to point out that the bank is, you know, your lender's probably pretty savvy as to know whether you do have the ability to refinance or not. And obviously the people that, the borrowers that don't have the ability to refinance, they're probably not going to be looking after them as well as they need to be, because they know that they can't go anywhere. So
That's it.
you really do end up paying a lot more, don't you, if you become a mortgage prisoner?
That's right.
You know, and then you've got the other side of it where you might want to do something with your property, you might want to release some equity, there might be something that you want to do, and if you're a mortgage prisoner and your current bank says no, then you're pretty much stuck. You don't really have the option of exploring other things. So what are some of the ways that people in our community can avoid becoming a mortgage prisoner? What are some of the things that they can do to avoid it?
That's a good question, Marissa. Look, the first thing is just to review your liabilities. If you're planning to upgrade certain things like cars or renovations, maybe hold off on that if it's not essential, because taking on more debts now will mean closing that borrowing capacity gap. If rates were to go up again, and it's likely that it will go up, it could tip you over from a servicing position now. You added liability to that, whether it be a personal loan or an equity release or anything like that, it could tip you over to now not servicing after that loan has been in place, and then another rate increase. So then to avoid that, I think at the moment cash flow is king. To build up your savings if you haven't already done so over COVID period. Look at when your fixed rates are ready to come out of fixed and onto variable, and prepare for that. And you just need to be mindful of the rate that we're in at the moment, the rate market.
I would say the number one tip from my perspective to make sure you don't end up being a mortgage prisoner is make sure you've got an awesome mortgage broker working with you, especially one from the Rise High team. Because really you need to make sure now more than ever that you've got someone working for you, not working for the bank. Putting your best interests first, prioritising your specific circumstances and your future goals and objectives, and really giving you specific advice that is relevant to your situation. And mortgage brokers are the best place to be able to do that, to make sure that you don't end up in a situation that you're going to become a mortgage prisoner, or if you're already there or already heading towards there, have a plan in place and a pathway forward so that you can get out of that as soon as possible, so that you can, like Twee said, free up the choice, make sure that you're always getting really good competitive rates, and try and escape the mortgage prison as soon as possible.
And if I could add to that, it could be a question further down, but when you approach a bank, if you don't have a broker and you approach a bank and you find out that you can't refinance because you can't afford or the servicing doesn't meet, no is negotiable, and that's why as brokers I love what I do, because I can offer you choice, because every bank's slightly different with how they treat living expenses and servicing. So if something doesn't work with one bank, it might work with another, and we could help you workshop your financial position to make something work. Like, it could be a reduction in your credit card limit, it could be pay down a small debt that you have that you could use your savings to pay down. So there's lots of things we could throw ideas on the table to help, and sometimes just having a fresh look at things will help.
The other tip that I think would be really good to share is if you feel like you might be heading towards this, or a mortgage prisoner, or maybe you don't want to shift banks, going to your existing bank and asking for additional discount before they know that you are locked in as a mortgage prisoner is a really good thing for you to be able to do. I know that for us in our team, we do that on behalf of our clients. It's part of our free home loan review service, where we'll go to their bank and just negotiate better discounts on their existing loans without the clients actually having to do anything. And that's awesome, because it means you can save money with your existing lender without necessarily having to move. So if you are a mortgage prisoner, at least you're getting the benefit of a cheaper interest rate and cheaper loan repayments, which will clearly help your living expenses. I think last month alone, just through our reviews and our retention work with the repricing, we saved our customers over $100,000 per year just by going and getting better pricing with existing lenders. And some of those people were mortgage prisoners in the sense that they weren't able to refinance elsewhere, but were able to get them the cheaper rates. So asking the question, contacting your bank, getting the better pricing, or speaking to your mortgage broker so they can do that on your behalf is definitely something that you should do if you are worried about being a mortgage prisoner.
That's right.
So what are some of the tips that you can share with our community to, make sure that they protect their flexibility and their choice moving forward, so that they don't try and avoid becoming a mortgage prisoner in the future?
Yep. So some of the stuff we mentioned earlier, look at your, I think most importantly now is to make sure your loan repayments are paid on time and all your accounts are in good order and good conduct. That means don't let it go into overdraw or overdraft or into negative credit. Make sure that you pay your mortgage on time. So all that comes down to conduct.
Yes.
So with some changes that may come through, banks may consider, and this is just talking, we might, it's not official, but the banks recognise that there are mortgage holders out there that are hurting.
Yes.
And they will potentially work towards coming up with a solution. But one of the things they're going to look at is your conduct.
Repayment history.
And your repayment history. So protecting that is really important. Your credit file is super important nowadays as well, because the banks are more than ever referring to that. So your credit file is your financial footprint. And you need to make sure that no bill goes unpaid or if it's late.
Yeah, I love that, because, and I think extending on from that, being proactive now and getting in advice early is so important more than ever before. Don't you agree, Twee?
Absolutely.
Don't leave it to the last minute when you want to borrow some money to actually meet with a mortgage broker. Meet with them as soon as you want to start making a plan, because there's so much to think about now moving forward that we didn't have previously. So the more proactive you can be in managing your finances, managing your financial position, managing your future goals, the better you are, I think, at making sure that you set yourself up for success. Wouldn't you agree, Twee?
Absolutely. I'm a long-term planner. I plan 6 months before I take out a loan.
And wouldn't it be great if everyone did?
Yeah. So get on board, everyone. Start planning.
That's right. But having the ability to sit down with someone that understands your specific circumstances and can nut out a detailed plan is just worth its weight in gold, isn't it?
Absolutely.
Yeah. Well, there you have it. That's everything you need to know about mortgage prisoners. We are here to serve you. So please let us know if you have any questions, anything you want to talk about. We're happy to go through your individual circumstances. Our service is free. Anything we can do, we're here for you. We're here to serve you. Thank you for joining in, and we'll see you again next time. Bye.
Bye.